Very special guest, Devin Choksi of KR Choksi Securities joins us right now. Devin, I mean, lots to talk about in this week. The kind of uptick that we've seen for the markets, some of the tech numbers as well. But let's start off with Reliance, something that you track extremely closely. One, what did you make of the numbers, slightly below estimates? Two, the buyback price. And three, what do you think as a result of both of these opposing figures, the stock would do Monday morning?
Yeah, Neeraj. Well, I think the numbers are certainly below the expectations. The street on the downside was expecting 4,500. We at our end were expecting around 4680 kind of a numbers, and we had factored into account the possibility of lower GRMs more because of the negative deltas on the petrochemical side, and also because of the negative GRM margins, particularly because of the lower margins coming in from the petrol, the gasoline and the LPG products. In Reliance's refinery being a complex refinery, I think they couldn't probably shift more towards the other products like fuel oil, where the margins have been better. So to an extent, I think the margins vis-a-vis the expectation of around 3.5% at the EBIT level has been reported at around 2.1%. So that is somewhat, I think, negative. If you look at, I think, the other part of the margins, that is petrochemical margins, they were expected to be below 10%, I think, and the EBIT margin has come about 10% slightly. So to an extent, I think it has stabilized the kind of a performance for the company in true sense. At the same time, I think what has contributed largely to the company's working has been around 1700 crore worth of other income which came in, and that is where I think the profit has been slightly more on the stabilized at around 45-50 kind of a level. To my mind, I think the numbers are negative, but let us look at it from this angle, that these kind of aberrations do take place in a business, and I think the situations do get improved over a period of time. Suppose if it was not good in third quarter, probably in fourth quarter it is little better, it is stabilizing, and maybe I think next financial year things would probably start becoming normal. So the heaven is not going to fall on the earth because of that. That is one thing for sure. About the buyback price, according to me, I think the buyback price could have been somewhere around 750-800 range. I think having given the buyback price at around 870 level, probably I think you have opened up the gate for the F&O traders who could probably short sell into the F&O market and get the advantage of the premium in their favor by because I think the cash market stock price may probably remain relatively subdued at a lower level. So to a greater extent, I think it's an arbitrage situation which is happening for F&O trader called ETFs, I think, in this kind of a market. I would have imagined that I think the price would have remained a little lower on the buyback side, but nonetheless, I think one will have to look at the value that the company is offering in this kind of an environment. 870 is the price at which I think the indirect communication which is coming up, which is suggesting that there is a value in this particular stock. The growth is going to be taking care of the kind of these values going forward. So probably I think the company remains confident on that front, as I would call it. Putting these two things together, as you asked the question, I don't think that the market would go very negative, but I would believe that I think 670, 680 would be the floor for the stock at this point of time in any kind of knee-jerk reactions, and around 770, 780 could be the upside. So this range would probably operate in the market of between 670 and 780 for Reliance in coming period.
An 8.5% rise this week. Let's see what Monday morning throws up for Reliance Industries. That indeed is going to be the big news maker on Monday, and we will surely watch the movement on that stock pretty closely after the 8.5% run up that the stock has seen this week. David, the other major talking point has been IT. A slew of results came out. You had TCS, Wipro, HCL Technologies, some in line, some a little disappointing. What would be the pecking order now that all the IT majors are out with their numbers for you?
By and large, I think except Infosys, I think rest of the three companies have at least given positive guidance for the future, and their run the business model approach for both TCS and HCL Tech has also suggested that they are basically getting their customers and probably I think getting them in this kind of an environment because they have a need to manage their infrastructure IT platform. So to an extent, I think they are basically confident about the volume growth and probably I think not as much confident about the pricing growth, which is natural in this kind of environment. I would think that all negatives probably are priced in, and given the option for investments in our markets, probably IT would remain in favor for investment because of the volume growth that they are suggesting. So to an extent, I think I'm particularly satisfied even with Wipro's number. I think Wipro has given the growth direction. It is already suggesting that the kind of a restructuring strategy which they have implemented has started bearing fruits and probably it is giving results. So to my mind, I think IT would give the stability to the market going forward. Maybe some small fall because of the rise that it has had, but I think otherwise it should be attracting buying at lower levels.
Okay, Devin, the other set of numbers that came out were the auto majors, and while they didn't do too much on Thursday when the numbers came out, on Friday, quite a sharp rally seen in Bajaj Auto and Hero MotoCorp. One, what did you make of the numbers? Two, what's the view on the stocks?
Both, I think Bajaj Auto and Hero MotoCorp, I think both of them have come out with a satisfactory number, as I would call it, in the December ended quarter. And probably I think though some amount of pressure on the margin has been seen, but in case of Bajaj Auto, because of exports, I think they have been able to make up for the kind of a growth that otherwise one wanted to look at from this company. The real challenge would be that whether they would sustain this kind of a growth in an environment like this. To my mind, I think if the economy starts assuming little bit, I think, of a normalcy which it is suggesting at this point of time, and if 24th January when RBI starts giving an indication for lowering the rate of interest, to my mind, I think the auto companies would once again come back into the recognition and the volume growth will take place. Fortunately, India is a consumption story and it is happening that most of the auto companies are getting benefit out of the smaller towns and probably rural markets because of this consumption boom continuing. So I think that the kind of rise that we have seen today in the auto companies was largely because of some amount of recovery, call it pullback from the fall that it has had in the post-result scenario. I would still call it, I think their stocks remain little bit range bound. Bajaj Auto kind of company should stay in the range of between 1400 to 1600 for some time, after which I think it should decide its next course of upside or whatever you call it.
Even aviation, Adani Enterprises, maybe even a VIP, anything that you track out here closely and you would have a view on?
Adani Enterprise, as you know, we basically track very closely this company, and we feel that the kind of a price rise which has taken place in this particular stock in recent months is asking for, I think, some amount of stability back into the normal price. Because earlier when the price fell to 260, it was largely due to an exit of some FII investors, I think, who had to have a redemption pressure for which they had actually withdrawn from the market. So I think the normalcy has come back into the market and the stock has returned back to the normal price range, as I would call it. Fundamentals of Adani Enterprise are definitely suggesting a lot of strength as I see it. In each of the businesses, I think, including the listed ones, which is Adani Port and Adani Power, along with, I think, the businesses held into the Adani Enterprises are showing some amount of growth prospects. At the same time, I think the coal mining activity in which they are basically into is also suggesting, I think, good amount of prospects going forward. So any fall into such kind of stock, I think, which is unnatural fall, should be used as a buying opportunity into the market for a long-term investor, because I think that is where you make most of it. When market is nervous and somebody is taking an exit because of the nervousness, I think if you end up buying, you probably make most out of that kind of an activity. And Adani being, I think, that kind of a category of company where the growth is seen very high, one could possibly make best when you buy at the falling in the falling markets.